We're getting started, and let me make sure this light is working. We're good. All right, so look at that. We have some people on first live stream. Super excited to be working with you guys, coaching you guys, showing you how to invest in real estate. Also, start putting in the comments your questions. I want to know what your questions are because I could literally just teach something, but I don't know what position you're in. What questions you have. So go ahead and start type in your questions, and I'll be looking at that right now. And inside of our Facebook community, if you go to masterpassiveincome.com/community, you can join in our Facebook community. Actually, So if you join there, I've already asked a few people what questions they have, so we can jump right into getting questions. But I also want to give a preference to everybody who's actually on the YouTube live stream right now. So go ahead and ask your questions. Since we're waiting for any questions coming out, I'm going to go ahead and jump into some of the questions. A big question that I always get, and especially I'm getting now, is, hey, what do you think about the market right now? Is the market going to crash? Is something going to happen? Is it going to keep going up and keep going up? Well, it has seemed like in the last year, it's just gone up and up and up. Even with the coronavirus, it seems like the market's still going up. Hey, what's up, Dwayne? See you right there, man. Thanks for shouting out. Put your question there. I definitely want to answer your questions. But I see that the market it's going to still go up. In fact, the real estate market has slowed down, and it's normal for this time of year. This time of year, it's always going to slow down. And the big reason why is because it's winter. Obviously, in the Midwest right now, you got a lot of cold. In Arizona, we got a blistering 65 degrees today. It might have been 68. So it's a little warmer than normal. So that was really awesome. But beautiful day, but not everywhere. A lot of places, it's really, really cold, so they don't move. I invest in Ohio, among other states. And in Ohio, it's snowing, and they don't move in the winter. So that's another thought. But then also, it's the middle of school year right now. And so right now, it's literally, February right now? It's the middle of school year, so people don't move when it's school time. So usually summertime is when sales pick up, prices start to change. So you want to be looking out for interest rates on top of what the actual home volume is. Like if there's more homes to sell on the market, then supply and demand really kicks in. And on top of that, the interest rates. Now, I did a video a little bit ago talking about the real estate market crash and what I think is going to happen. And on top of that, you have the Federal Reserve showing us that there's a lot of problems here in the economy because they said, I think it was beginning of last year, they said, okay, guys, but 2020 is when they said, we're going to keep interest rates ridiculously low, like almost zero for 3 years. 3 years, get that, 3 years. We're going to keep it low for 3 years. And the Federal Reserve uses the interest rate to help the economy not go into deflation, not get too much inflation. They use it as a tool. Don't get me started on Federal Reserve and central banks, but they use that as a tool to keep the economy stable. Not too much inflation, not too much deflation. And so what you're going to see now is they said 3 years keeping it at a certain interest rate, which is near zero, when usually it's like every 4 months, every maybe once a quarter, they come out with a new projection of what the interest rates are going to be. So they raise it up and down depending on inflation. But they said 3 years. So all that to say, it doesn't look like there's going to be a lot of great things going on in the real estate market or in the economy in general. Plus, I just saw with a lot of things that this new administration is doing, about 900,000 jobs were lost recently. And that's a lot of jobs that are really going to hit the economy. It's going to be interesting. Now, I did just put out a video why you should invest now before there's a crash. Watch that video. I don't need to go into that because I want to save our time right now to answer your questions. Really want to do that. Watch that video though, because you want to invest now for many, many different reasons. And I literally just before getting on this live stream, I recorded another video saying how to protect yourself before or when you're investing now before a crash comes. So how to protect yourself. So be watching for that the next, couple of days, maybe next week, sometime when I actually release it. But reasons why you should invest now, and as well as how to protect yourself when you actually are investing. Okay, so we do have a few questions. So we got Anthony, and says, how do I find cities good for multifamily investing in South? So I think you're saying like, Texas, Louisiana, like the more southern states. Well, a good thing for multifamily, when you're thinking okay, so whenever I say, or you hear me use the term single family home, that's anywhere from a 1, 2, 3, or a 4 unit, because that's what the IRS uses. IRS says if it's a multifamily, it's 5 units and above. That's what the IRS says. So when I say single family, it's 1 to 4 units. So Anthony, if you're saying, is it 5 units and above? LoopNet, yeah, LoopNet.com, LOOP net.com is a great way to find really, really good properties that are multifamily, which are commercial, like apartment complexes. So if you want to look at LoopNet.com, great place to look. Also, the MLS is also another huge place. If you actually use realtors, they will definitely give you access to the MLS. You can see all the properties that are multifamily as well. So I would use that. Wookie World. Okay. What's the percentage of students that take your training actually buy a property? Yeah, that's a great question. I would say probably. So I recently developed the Real Estate Wealth Builders, which is the group coaching. You get every single course. You get the student community where you network with other people. You get a mini mastermind, all that sort of stuff. That has since skyrocketed. So literally it's like 75% of my students. Now, again, remember, this is on the student to buy. I'm your guide. I'm helping you. I want to show you how to fish. I don't want to give you a fish. Like, here's your property, buy this one. I want to show you how to fish so that then you would actually fish. But it's like 75 or 80%, if not higher, people who are in the Real Estate Wealth Builders because of the group coaching. So reason why I did Real Estate Wealth Builders is because when I developed the ultimate real estate investing program, this investing system that literally takes you from beginning, not having any knowledge of business, real estate, or anything, to the very end, having a business with a property, was that there was no coaching in it. There was also no team building or networking or anything like that to help you be encouraged. And that's why I built the Real Estate Wealth Builders. If you go to my site, masterpassiveincome.com /wealth builders, you'll find it there too on my site. But inside there, it's so much more successful. Now, think about students that just got the ultimate real estate investing system. They kind of give up. And so I was disappointed. I was like, man, these people, they go into my course, but they don't actually implement the things that I'm teaching. I got to figure out how to fix that. And ultimate real estate investing system with the Real Estate Wealth Builders is by far, and plus you get 4 of the courses with it. You get the student community. The one-on-one coaching is by far, it's almost 100% of my students to get the one-on-one coaching. That's a bigger, higher price point because it's literally taking up my time. You get the ultimate real estate investing system. You get the student community. You're grandfathered in lifetime for access to that. But that's almost like 100%, maybe 90%. Actually buy a property. Many buy multiple properties. So thanks, Wookie. Appreciate the question. Antonio, hey, what's up, Antonio? Says, how to find bandit signs in other states to get them on the buyer's list. So Antonio, this is something that I have. And I want to say you might be inside the Real Estate Wealth Builders. I'm not sure, but inside the Ultimate Real Estate Investing System, I have an entire lesson on how to find wholesalers. Now, I'm going to go ahead and give away this tip because you guys are on here, but there's a huge tip on how to find wholesalers and how to find bandit sites. So Antonio, forgive me if you're not in there, but I could have swore that you're in there. But anyways, long story short, what you want to do is if you're in your own city, this goes along with Antonio's question. If you're in the one city and you're going to look for wholesalers, you drive around and you look for the bandit signs. We buy houses fast for cash. Well, those are wholesalers. Those are literal wholesalers. Call them up and say, hey, I'm an investor. Put me on your buyer's list because I want to buy properties. And so they will put you on. Now, Antonio's question, if you're not driving around the city, how are you going to find them? Easy. 2 different places. First one is definitely Craigslist. Craigslist is fantastic. You're going to be able to find it. Just look up the words, we buy houses or houses for cash or any of those terms, like literally do a search for that. You're going to find wholesalers. Call them up. Or if you find homes that are listed for sale, if you see the same number over and over again, that's probably a wholesaler. Go into investment. Here's another huge tip. Go to, let's say you're investing, I don't know, in Indianapolis, Indiana. You want to look for maybe a Facebook group that is Indianapolis investors. And you're finding all the other investors and you say, hey guys, is anybody a wholesaler here? I'm a buyer. Just a couple of thoughts. There's so many other ways to find wholesalers. I love wholesalers. So if you're a wholesaler on this, I love you because you do all the work. I make all the money, plus pay you money. It's great. It's a great working relationship. So those are, Antonio, there's a few of many different ways to find great wholesalers. Dwayne, all right, he says, would you mind speaking about what we would actually get if we purchase your mentor program? Sure, I can absolutely do that. So if you get the mentor program where it's one-on-one coaching, you're literally going to be working with me one-on-one. Now, don't get me wrong, you're literally doing all the work. I'm just coaching you, just like a coach would. Like if there's a football team, the coach is not going to be tackling or throwing a pass. No, the coach is coaching. So I'll be coaching you. So you get the ultimate real estate investing system. And I don't want to make it sound daunting, but there's over 100 and maybe 50 different video lessons as well as bonuses and stuff like that, because there's so much to learn. And what's interesting is everything that I give away for free on my YouTube channel, podcast, articles, and all that sort of stuff, that's literally 20%, give or take, of what you need to know. The rest is inside the course, it's inside the coaching, everything that I have inside the Real Estate Wealth Builders is both the one-on-one coaching. So you get, if you're doing the mentorship, the one-on-one, you get unlimited lifetime access to the product of the Ultimate Real Estate Investing System. That's going to show you beginning and end everything. You're also going to get a 6-month working program with me where I'm going to be working with you one-on-one. You get unlimited email with me. Email access, because it's easy for me to answer emails in the middle of the night when I can't sleep, when I'm thinking about real estate. And you also get 6 one-on-one coaching hours with me on top of that. And you get all my networks. You get literally everything. You also get grandfathered. The third part is, so there's a teaching in the course. The coaching is with me where we focus on you. And then you also get the student success program where I actually have all my students in there, hundreds of students in there. We network together, put you in a mini mastermind. You get all the contacts of the other students that have property managers, financing for mortgage brokers, all that good stuff. So there's a lot more to it, but that's a broad, quick overview of everything. So thanks, Dwayne. Rob says, Dustin, do you own any short-term rentals? If not, why have you steered clear of short-term rentals? I love making sure that everything is consistent, where that's how I feed my family. That's how we put a roof over our heads, is having consistent money. Not saying short-term rentals are not. I personally think that, number one, to answer your first question, Rob, no, I don't own any short-term rentals now because I love long-term rentals. I can count on that money coming in, and I literally don't do a thing. There's no moving parts. It's literally the property. That's the moving part. It does it on its own. With short-term rentals, there are ways to hire property managers that will go in there, turn over, and actually manage everything, do the listings, put the bottle of wine, if that's something you want to put in there, shampoo or whatever, do the turnover, which is a lot of expenses. And on top of that, they're going to charge you at least 25%. Now, you're going to make more money in general with a short-term rental because you're renting it per day as opposed to per month. But there's a lot more moving pieces. I don't want any moving pieces. I just want money coming in. I don't want to have to worry about that. But if you were, my personal opinion, where I tell all my students, you should probably get about 80% long-term, maybe 20% short-term, because you'll make some more money with short-term. But I personally I just buy more properties. Just keep buying more properties and I make more money that way as well. All right. So Renee, so how is the market in Arizona for multifamily? It's actually, two things. Number one, the market in general is pretty high. And I also want to know, what do you guys think about the real estate market in general? Do you think it's going to crash? Go ahead and put in the comments if you think it's going to crash, if it's going to continually go up. I know people might say that hey, you better buy now. You're never going to get in because it's going to keep going up. Well, they said that in 2008. So I want to know what you guys are seeing. My TV just turned off behind me. Oh, well. There we go. I like having a nice little background for you guys. But so in the market for Arizona, even though the price is high, the values are really high. Homes are selling, multifamily are selling pretty high. You're still going to get good deals. That's what I tell everybody. Even though the market is high right now, there are still great deals out there that you can absolutely buy and make a lot of money. So as far as multifamily, I haven't looked at multifamily for a little while. A big reason why is because I do think there's going to be a correction. And so when there's a correction, it's like Monopoly. You start with nothing. You just, get money because you have a job. Then you buy land, and then you buy a house, and you get more houses, and you eventually get to hotels, which is multifamily. You want to keep doing that. So I've just been, patiently waiting for the time where multifamily actually is a good deal. Because what you're doing when you buy multifamily, you're buying a business instead of just a property. Long story short, a lot to go in there. We don't need to cover that. Let's move on. But in AZ, it's going to be pretty good. It's really good all over the country, other than the coasts. I personally stay away from the coast. There are ways to do it. I just don't. All right, Cecilia. Hey, Dustin, I have taken your course. I haven't taken your course because I'm overseas. So do you think it's suitable for me? What is your recommendation on my case? If you want to invest in America or anywhere in the world, but mainly America, It's absolutely going to help you. I have students that live in either Canada, Switzerland, and Israel. Those are the ones that I know of right now. But I know of specifically one of my students that lives in Switzerland. His name's Rick. He's buying property after property. There was a lot to actually go through to get him to be able to buy in America. If you're a citizen, it's super easy. If you're just living overseas, if you're a citizen in another country, there's a little more work you got to do with making sure you get a bank account and all that sort of stuff. But it's absolutely possible. So my student, Rick, he literally got me one-on-one as a coaching student, and I coached him the process. Now, he did have to do a lot of work because I don't know Switzerland's law. I literally don't. I've been there once, vacation, which is a lot of fun. Beautiful, but I have no idea about the laws. So he had to do that work on his own because that's an outside situation. But everything else in America, absolutely. So Cecilia, absolutely, I'll be there for you. The one-on-one coaching is probably going to be a little better because, and I even have Rick. Rick is super helpful. He's so helpful that he's like, hey, anybody you want to, send my direction, that's, your coaching student, send in my direction. I'll give them my pointers, lessons I learned. So Cecilia, I'll definitely help you out and take care of that. Christina, hey, what's up, Christina? Okay, so how do you run a background check? So how do I screen tenants? So super easy. Number one, get a property manager. That's the easiest thing. But then the second way, if you're managing yourself, use Cozy. Remember, Christina, I know I believe, if I remember correctly, you're inside the Real Estate Wealth Builders. Use Cozy. Sign up to Cozy. It's literally free. They only make their money when a background check is run, but you're not paying that. So it doesn't matter. It's the tenants paying $30 and you get that background check. So number one, your property manager will do the background check. Number two, Cozy will also COZY.co. And if you put /Dustin, it doesn't matter if you do, or masterpassiveincome.com /Cozy, COZY, it'll show them that you're connected with me. But they literally take care of all that and it's managed. So if you're doing it yourself, use Cozy. But here's the third thing. Absolutely, Christina. Great question. You must do a background check on every single tenant you're potentially going to put in your property. Never, ever learn from my mistake. I'll tell you, I had one potential tenant that said, hey, I want to move your property, filled out the application, and literally looked perfect, like a great tenant, lots of money, no evictions, all that sort of stuff. The background check, and I paid for it myself because they didn't want to pay for it because it was just lower class, less money, $500 a month. So they were like, yeah, I don't want to pay $30. Long story short, what happened was they were actually evicted 4 times in 3 years. And me being a little smart said, I'm not going to be the 5th time in 4 years or 3 years. So I did not select that person. So absolutely, Christina, great question. All right, Dave. So do you have or recommend Section 8 tenants? I love Section 8 tenants. Well, I love Section 8. Section 8 is fantastic. A number of different reasons why you like Section 8. Number one, government pays. You get money like clockwork. It comes in your pocket all the time. Another one is tenants don't want to lose Section 8. They don't want to lose free money, so they do everything they can to make sure that the property is taken care of. Another one, Section 8, the government entity or whatever, whoever does Section 8, they actually inspect the property for you and for the tenant. So if there's deficiencies in the property, one caveat, not caveat, but like thing to watch out for, expect once a year to have like a list of things to do, paint this, fix that, do this, because they go through the property to make sure it's good for the tenants, but they also make sure the tenants are taking care of your property as well. So Section 8 is fantastic. I really, really like Section 8. All right, Jory, what's up, man? So I think the market is due to have a correction. Markets go up and down. Everything that has happened in the last year with COVID and the election, I think I think it'll adjust soon. Sorry, I misread that. Absolutely, I'm right there with you. I don't know when. I literally thought it was going to be 2017. So I thought it was going to be, 3-4 years ago now, that there would be a crash because it was 2008 when the crash, 2017. It's been past that. It seems like there might be a crash, but right now is the best time to be learning so that when there's a crash, you're able to jump on all these properties. I mean, it's super phenomenal to jump on these properties and make a load of money. And when there is a correction, remember, even if the price comes or the value comes down on the property, you're still making money in passive income. We always make $250 a month in every single passive income property that we buy. And even if the value goes down, we still make passive income. The value will come right back up. And we will know what a good deal, what an amazing deal is when we're already investing. Like, man, these houses are going for $100,000. Now it's like $80,000. I could buy that. This is great. Or it's $40,000. This is even better. Like it's pennies on the dollar. It's a fire sale. Let's go and buy them. All right, Antonio. So, yeah, do I need to build a website to show my properties since the property manager is responsible for finding tenants? No, it's not, definitely not a necessity. I personally don't have a website because I always have property managers. The reason why I talk about that inside the ultimate real estate investing system is I don't know how everybody's going to be managed. A lot of people like having their, manage their own properties. If you do, get your own website. I walk you through inside the Real Estate Wealth Builders and the courses how to actually create that and build it up. But if you have a property manager, they put it on Zillow and all that sort of stuff. If you use Cozy as well, you can even list, remember, masterpassiveincome.com/Cozy. Sign up, it's free. They will actually post and list properties for you for rent. So yeah, you don't necessarily need it. It's good to have once your portfolio gets bigger and bigger, especially in each city. You can even name it specific city. Like let's say it's Cincinnati that you're investing in. You might say Cincinnati Rentals or Cincinnati Best Homes that you could rent.com, whatever it might be. So it's specific for that city. But then you're investing in like Indiana. Then you have a whole nother website for that one specifically for that city. Okay, let's see. So Wookie, what's the average price of a property your students buy, and what is the average cash flow after expenses? Now, remember, it also mentions property management, CapEx, and all that sort of stuff. I'm glad, obviously, vacancy factor, that's another thing that you also have to have in there as well. But remember, the minimum is $250 every single month, which is $3,000 a year in passive income. So that's the minimum. A lot of my students get more. So probably the average price of a home, we're looking anywhere from $50,000 to $100,000. Now, if you want to say average, maybe $75,000. I do get students that get $120,000, $150,000. But I start thinking, hey, if you're going to buy a $250,000 house, that's a good size mortgage. That's a lot of down payment going to that house, one house, and you're going to be making $250,000. Why don't we buy like a $125,000 house, two of those, split up the down payment, get more properties or more passive income every single month. So hopefully I answered your questions. But about $75,000 about the average. Now, you don't need to use all your own personal money to buy it. Your down payment is going to be, let's say it's, I have some inside the Real Estate Wealth Builders, we have a laundry list of all the students. They found a bunch of great mortgage brokers. They literally they were calling around. I have one student literally called 23 mortgage brokers and have finally found the one that fit her. Like basically, she wanted to borrow like $35,000. And usually for mortgage brokers, $50,000 is the minimum. They don't lend for any lower than that. She found on the 23rd call, maybe 26th call, she found the company that will lend as low as $30,000. That's inside the Real Estate Wealth Builders, a big list of all these different companies that you can call that all the students have already found out. Okay, so let's see. Your property managers ask for approval from you for every repair. How often are you approving repairs? So I approve because I know my property managers. I've been working with them for a long time. Anything under $200, go ahead and take care of it. I trust you. Now, if I start seeing some expenses that are just like racking up like every single month, little bit, it's like nickel and dime you. In fact, I had one student, I had to coach him how to not get that. We did a whole lot of things. Don't need to go into that. But what I do is say $200. Anything under $200, just go ahead and do it. I trust you. Now, other students are literally like, well, let me say this. If you're getting started, you have maybe 1, 2 properties, 3, maybe even 5. You should literally have every expense go through you because you're counting every penny. Every single penny that goes out, you want to make sure you don't overspend because you absolutely want to buy more properties. So you don't want to spend that money. So there's a lot of negotiating tactics with vendors and all that sort of stuff. I'll coach you all through that through the Real Estate Wealth Builders. All right. So let's see. Anthony says, how much do I need to save to be able to start one-on-one coaching? So Anthony, so with coaching, I don't take on students who have less than $10,000 to invest in a property. Main reason why is it's just very, very hard. I don't need to go into the reasons why it's hard. It's just much harder. When you have $10,000, you actually have the ability to do many different options to buy your property. Now, I can't remember whose question it was, but one of the questions was like, what's the ratio of, how many students actually buy a property? Well, it's contingent on the students being able to put the effort in, buy the property with the financing, get the financing. I had one student, Bridget, terrific. She's such a hard worker. She was having so much trouble getting a property. Towards the end of our one-on-one coaching, she got her property. She had to do so many. I coached her to basically use at least 2 or 3 different ways of financing to put that together to buy the property. Now she has, I think, 3 properties now. So it's just every student that I love with my students, what I love to do is give them all the options that are out there, because when we start investing, we don't know what options are actually there. We don't know that you can put this together and do this. Now, when you have somebody telling you these are your options, and you take into account your risk tolerance, how much money you have, your goals, all that sort of stuff, you figure out what's best for you. You make the right decision. That's what I do with all my coaching students, the one-on-one coaching students. So the $10,000 is the minimum, just because it's not hard on me. It's just hard on you. Save up to $10,000. There's so much less worry that you have to have with that. Okay, let's see. Next question. Just Toffs. So have you had any issue with tenants not paying rent due to COVID? That's a good question. Protection measures are, if so, you're also able to pause your payments to the bank. So number one, I don't want to pause my payments to the bank. That just screws up your credit, like it literally does. They report that. So number one, don't do that if you have the money and you can't afford it. I'm blessed to have lots of properties, just a lot of work over the years, 30 plus properties now, that I don't need to have, if somebody doesn't pay, I always make sure the mortgage payments are paid. If I want to buy another property, I need to have good credit, which means I need to not go through, pause it with the bank. The other thing is, no, honestly, I haven't had, sorry, let's take that back. Out of 30 plus properties, I had one tenant literally say, hey, I'm going to be late for the next, it seems like maybe next couple months. I'm working really hard. And he was late. I got a late fee, caught up, everything's fine. But honestly, no, I haven't personally. But I've also talked to a lot of other investors. They haven't. I've maybe had 1 or 2 investors say, yeah, one property, they lost their job for COVID and they had to move out. So honestly, it hasn't been that rough for us. Okay, Christina, let's see. Where can I find the best rental agreement for a single house? How many people do you think should be allowed in a 3-bedroom single house? That's a great question there. So inside the Ultimate Real Estate Investing System, Christina, you can find the downloads. You'll have the rental agreement, the lease agreement inside. That's literally the one I use. So use that inside there. It's inside the Real Estate Wealth Builders. Also, I personally, it's really up to you how many people you want in the room or in the place. So if you're going to have 3 people inside of this, every single one of them must be on the lease. Big pro tip. Like, don't just have, or if they're over 18, kids, different story. You're not going to have them on there. But what you're going to do is you're going to make sure that every single one is on your lease. I personally love to rent to families. You'll hear me say this all the time. Inside the Ultimate Real Estate Investing System, I walk through the not perfect, but like the best type of tenant. Families are fantastic. I love families because they don't really move that often. Kids are in school, parents work in the area. I love that. And so personally, I mean, you could get into some like college students that like 3 of them, you can. It's just a lot more to deal with. They're going to move out when college is over. So yeah, that's where you can get it. Nelly, all right. Hey, Dustin. Hey, Nelly, what's up? So what markets do you invest in personally? And do you have a favorite? So Ohio and Texas and Arizona are the current places that I'm currently investing. I'm looking at Tennessee and Indianapolis, Indiana. Let's see. Florida, I actually really, really want to buy in Florida as well. But at the same time, I haven't pulled the trigger just because I don't really need to. I have plenty of properties now. So long story short, Ohio, Texas, and Arizona currently is where I am investing. My favorite, I would probably have to say, Ohio's great. I really like Ohio. There's lower price point. You get a lot of cash flow. Really, really great. Okay, Jory, so do you recommend having a real estate attorney in your home state or your property state to review, advise, and lease and contracts? Well, Jory, so each state, let me say how to say this. All states are different. Some states, you just need a title company. Other states, you literally need an attorney and a paid lawyer to actually do it. I know in Connecticut, you need a lawyer, I believe, a couple other states. But anyways, you would need an attorney in that state. Now, attorneys, they can practice in particular states that they're actually licensed in. So what I would do is I would get an attorney for me as a business overall. So my attorney, he's actually in Connecticut, and he's a good friend of mine. So I usually use him for everything that I do. But for, call up attorneys in the states that you're investing in. Like, let's say you're investing in Las Vegas. Call up the attorneys there in Las Vegas and get one of them that you can somewhat trust. Like, you could talk to them, and I would say somewhat trust, saying lawyers are bad, but not saying that, just saying that what you want to do is get a lawyer on your team in Nevada, just in case something happens. So yeah, but definitely hear this, Jory, and everybody, never put any attorney, never put any lawyer on a retainer. Retainer is where you're paying them recurring fee. You don't need that. You literally only need it when you need them. Just make sure you have their number. You've talked to them before, and you know everything about them. Okay, let's see. So Jonathan. So are there any states that are still landlord friendly and are not affected by the moratorium? So the moratorium, what's interesting is it's obviously nationwide, but it's only on properties that are Fannie Mae or Freddie Mac or government-backed loans. So a government-backed loan, that would be a property that is protected by the moratorium, where you can't actually evict them, because they're saying you can't evict them because we're not going to make you pay your mortgage. That's really what it comes down to. So it really doesn't depend on the state, but more so on the property and what mortgages you have. I've been blessed to pay off a lot of my mortgages, and I also have commercial mortgages, which is not Fannie Mae or Freddie Mac. So that's why I definitely have the ability to, I'm a little better off if I ever had. But again, like I said, COVID's been rough for everybody, but my tenants have not been too bad. So I got a question. Now, Jory asked another question in the Facebook community. So if you guys want to go to the community, you can absolutely do that. So when you complete your home equity loan and it comes to time to pay for an accepted bid, do you need to transfer the loan into your business account with the LLC residents to be under? So long story short, if you have money, do you need to put the money in your business name? Absolutely not. The LLC, Jory, is a pass-through entity. What that means is the LLC is still there, but you are the business. It's all about you. It just protects you. All the money passes through back and forth. So literally buy the properties with your own money, literally do that and put it in your name, or it's in your own bank account. And because Jory, I know you're inside the Real Estate Wealth Builders. We use CIT Bank, or I use CIT Bank, store all my money there because it has the best interest right now. It goes up and down, but right now it has the best one, and it has like last 3 years. So that's what I personally do. Keep it there and then just wire transfer. It's your own personal name. Another question, Courtney had a really good question. I like this one. Should you have an LLC before you buy your first rental property, and what % down should you have? So there's a lot to go in there, but I'll quickly unpack it. So should you have an LLC before you buy your first rental? 100%, I believe yes, because we're starting a business. Remember, I say this all the time. You want to build the business first. Now, your LLC, you start the business, you get an EIN number, and I walk you through how to do all that stuff inside the Real Estate Wealth Builders. Literally walk you through how to do this. But what happens is you start your business, you get a business credit, line of credit, or not line of credit, but like you get a business social security number. It's called an EIN number, employee identification number, from the IRS. That starts your business credit. Then you can buy properties with your business credit. I have business loans on properties. I have business loans on credit cards. So long story short, you want more credit in your business. As soon as you realize and decide to start investing, start your LLC. It doesn't cost a lot of money. If you're inside the Real Estate Wealth Builders, I show you how to do it. So you guys, if you watched any of this or listen to my podcast, you know how frugal I am. I don't like spending money because every penny that doesn't go to a property is not making me money. So I show you how to get it really, really, really cheap, maybe like $100 bucks, $150, and you have your LLC, you have your EIN number. Your EIN number is already getting you building you business credit. So absolutely. What % down? The other part of your question, Courtney. What % of down payment should you have? I personally think you should have. Well, it depends on what the price of the home. If it's $70,000, you might need 10% or 20%, depending on the bank. Honestly, it's going to be sucks to hear this, but it depends. Depends on the property, depends on the type of loan you get, type of mortgage broker. I have inside the Real Estate Wealth Builders a list of mortgage companies. Some are even like 5%. You can put 5% down and buy a property. Okay, so let's see. I think we got another few questions. Dwayne says, what are some questions you would ask a realtor and a property manager company before you work with them? There's crap load of questions. Go to crash. That's way too much. But there's a lot of questions that you should ask, especially your property manager. They're your quarterback. If you don't have a good property manager, your business is going to suffer, and you're going to be pulling your hair out at night. So inside, and I'm not going to get into these questions because there's so many of them. But inside the Ultimate Real Estate Investing System, Dwayne, I literally have 22 questions that you need to ask your property manager. I'll give you one hint though, or one tip on your property manager. what I love to ask, and they might say, well, fair housing laws and discrimination, I'm not going to answer this. I'll give you a huge tip. I love asking because remember, we invest all over the country. This is a huge tip. Always ask every property manager you talk to, if you were to invest your money right now in this city, where would it be? Now, if you understand that question, those answers you get, you're going to get from all these property managers the good parts of town to invest. Because remember, we invest all over the country. I live in Arizona, but I invest all over the country. Same with my students. I never fly to my places to visit the city to figure out where is good and where's bad. Neither do my students. What we do is we have the professionals, the experts do that. So that is one of the number one questions on top of everything else. There's like literally, like I said, a list of 22 questions to ask, but that's a big one. Where would you invest your money? Because it's going to really let you know where to invest, but also process of elimination, deduction. You're going to say, well, everybody said the Northwest, I don't know on your camera how that looks, but Northwest and the Northeast are great. One person's, a couple of people said the Southwest, but literally nobody said Southeast. Hey, that might be a place to stay away from. Don't go to the Southeast. Just give me an example. Okay, so Jason asked a question. So we have perfect credit. We have some cash to invest, but probably can't finance much because our income is not high. If we had $50,000 in cash, should we invest in one solid rental? So, Jason, that's a great question. I would personally say I would go. This. I'm gonna get into some one-on-one coaching with you. So, you might be thinking, should we put it on as down payment? Should we buy one house for cash? What should we do? I say build the business. Number one, know where you're going to invest. Build the business, and then look for deals. We have no clue what deal is going to come. We don't want to fit like a round peg or a round peg in a square hole. We don't want to do that. We want to find the deal. And then like what I do with all my one-on-one coaching students, they find the deal. And then we figure out, I work with them to actually get the financing. If they have 50, like with you, Jason, you have $50,000 to invest. That's a great start. We might be able to buy 3 properties with that. We might just use it for one and then do a burr. We have many, many options. So that's what I would do is I would build a business. I would start looking for properties, and whichever deal comes up, figure out how to use this money to get that deal. All right, Eli, good name. My son's name's Elias, so we always call him Eli too. So do you and your students actually average $250 a month in passive income, $100,000 per $100,000 house, even after unplanned and irregular expenses? It just seems too good to be true. I get it, Eli, completely get it. But yes, 100%. Now, I'm not saying that every house that you're going to find is going to make you $250 a month. We just don't buy them unless they're $250 a month. That's the bare minimum. And the reason why the bare minimum, because it's a buffer. Some people might say, just make sure you're making $100 a month. Well, that's only $1,200 a year. If you have a furnace go out, even if you're saving for repairs, that's going to take all your entire year's worth of money. Well, I feed my family on that. I'd rather have $3,000 as a minimum. Now, I have many students, and even now, Eli, I have students making at least always 250. Like I said, again, that's the minimum. I have students making $500, $600 a month in passive income, depending on the deal. So going back to Jason, your question, depending on what deal comes, I'll give you an example of one deal. This racked my brain. Really good example. So one of my students bought a duplex, and he paid literally $50,000 in cash. So you have let's say you have $50,000. He paid $50,000 in cash. Bought the property. It's making him, well, maybe before I tell you how much passive income he's making, he even refinanced the property, pulled $48,000 out, literally pulled because the value was like 65. So he's able to pull out $48,000, $2,000 left in the deal. He's already still with that property, I think making $800 a month in passive income from that one property. Interest rates are so low that your passive income just shoots right up. So yes, Eli and Jason, 100%. Okay, Cecilia, how much money do I need to invest as a foreign investor in the U.S.? I would say it really comes down to the exact same numbers for buying a house. But if you need to have a lawyer in your country to set something up, that's going to be extra cost. If you need to set something up in a bank account, that's going to be extra cost. It doesn't really change when you're investing in America, because in America, the way that it works out is literally the same numbers. We just need to make sure that you have the right financing. Like if your bank requires you to put 80%, I don't know, it's probably not true, but I'm just making it up. Let's say they want you to put down 80%. That's a different story. So we need to figure out where you are. And that's what I do with my one-on-one coaching is figure out. I love, and what I tell all my boys in my family, I tell them, we figure things out. We're Heiners. We figure things out. That's what we do. If there's a problem, we're going to figure out what it is and how to solve it. As an entrepreneur, as an investor, there's a problem in front of us. We figure it out. We solve the problem so we can start making money. So yes, absolutely, Cecilia, you absolutely can. It really varies. But what it comes down to, the price of the home, it's the same price. How much you need for financing is a whole different story. Okay, Wookie, what's up, man? Or I think it's, sorry, don't know if it's a man or woman, but Wookie said, so should I start an LLC? Should I start an LLC, open a business credit card, then buy your training so I can get the bonus points some of the credit card gives you? Absolutely. Well, shoot, I don't have the credit card with me. So here's one really super awesome thing. I've had my business open since 2009. So, Wookie's question was basically, should I open a business credit card so that I can pay for your trading and use that to get bonus points? I personally believe so. And the reason why because my business credit has been open since 2008 or 9. I started in 2009 with my LLC because I didn't know what I was doing. I bought properties in 2006, just put in my own name. Long story short, I've had that credit forever. I got in the mail from Chase. Yeah, Chase. It was like their green, gold, sapphire, whatever. It's a fancy card. If I spent $10,000 in 3 months, now I know you might be thinking, well, it's a lot of money. Yes, it absolutely is a lot of money. I believe, even with me, with all my properties, I still know $10,000 is a lot of money. But with $10,000, they were going to give me 2% cash back on all those purchases and everything further. So that's literally $200 in my pocket. On top of that, the signing bonus just to get them in 3 months. If I spend $10,000, I would get literally $1,000. So that is $1,200 I'm getting from this one credit card. I love it. That's free money. Why not? But on top of that, I think, actually, I'll say this. My students really love everything I've done for them. You can see all the testimonials of all my students. I just love helping people. So this is why I love, it's just so much fun for me. Not because real estate's fun, even though real estate's awesome. I just love what it affords me. I literally just sat around all day, played on the computer, hung out with the family, went to the gym, just did whatever I want because I didn't have to go to work. And that's what I want for you. Okay, so Jess Hoff says, can you elaborate more on using IRA funds as an investment income? So IRA funds for an investment income, maybe kind of like the two terms are kind of, they don't really go together, investment income for IRA funds. Now, income for yourself, no, you can't do that. Let me explain how an IRA, 401k, if you did self-directed, and I teach all that stuff, how to actually do that. So the IRA, self-directed 401k as well, you can use that to buy investment properties, but that passive income does not go into your personal pocket. You might already know this. I just got to, for everybody, that money does not go into your personal pocket. So it's not investment income for you. It's an investment income for your IRA, your 401k, and it goes in there. If it's a Roth IRA, it's literally tax-free, which is phenomenal. And then you can keep buying properties over and over. So what I do is I have, let's see, Rocket Dollar. If you go to masterpassiveincome.com/Rocket Dollar, it gives you a discount to this company that I strongly recommend. Rocket Dollar does the self-directed IRA and the self-directed 401ks, where it's literally like a checkbook. You use it just like your bank account, but every bit of money that goes in and out of your bank account needs to be for the IRA. Any money that comes in, like you can't touch that money, like meaning your own personal bank account. So hopefully that answered your questions, that you can absolutely use that. What you do is you put your money into a custodian like Rocket Dollar. That's the custodian. masterpassiveincome.com/Rocket Dollar. I think, it gives you, some sort of discount on their services, but you basically get a bank account, and that bank account's for the IRA. You fund the IRA, and then you buy properties out of it, but all the money has to go back into it. Just like how your money is, simple. If you're going to talk to your property manager, they're going to say, hey, where do we, send the money to? Here's my bank account. It's literally your IRA's bank account. Give them the routing number, the account number, boom, it goes right in there. So in and out of there, super, super simple. Okay, so let's see. So Anthony says, do most of your students purchase single family homes, 1 unit, or multifamily, 2, 3? So at the beginning, I said this, I'll definitely say it again because I don't do a good job of explaining it. When I say single family homes, it means 1 to 4 units. So one, or single family, duplex, triplex, or fourplex. The reason why I say that is because that's what the IRS calls it. You still get a 30-year fix. If you buy a 4-unit fourplex, you can still get a 30-year loan, a conventional loan that is fantastic. Once you get into 5 units, that's multifamily. IRS views it as multifamily. Banks view it as multifamily, and it's commercial loan, 5-year loans, higher interest rates, you have balloon payments, all that sort of stuff. Different. So yes, we buy everything from 4 all the way down. Once you get to 5, it's a whole different ball of wax. You have to learn so many new things because it's basically you're buying a business. You're not buying a house or a fourplex. It's a business. I don't need to get into that. There's so much more. Like literally everything you learned about single family homes, 1 to 4 units. There's so much more to learn about multifamily. So we can get there, but just right now, 1 to 4 units. So we always buy 1 to 4 units. So to answer that question, Dwayne, so can you get a commercial credit as soon as you open an LLC, even without any commercial assets? Absolutely. Absolutely. You can. Now it's just like, let's say you, when you were younger, you wanted to build credit. You go get a gas card, literally go get a gas card from Chevron or whatever, charge $5, pay it off. Next month, charge $5, pay it off. That's building credit. You have credit. You're not using it. You're paying it off if you do. So yes, you absolutely can. 100% can. Awesome. Justin, I answered your question. So Dwayne, any assets? So going back to the original question from Dwayne, can you use the commercial once, if you got an EIN number, got your commercial credit, can you buy an asset with that? You have to talk to banks. Like literally the banks are going to all have different terms, criteria, and all that sort of stuff. Talk to different banks. In fact, that's why one of my students literally talked to like 20, 30, or 26 different banks until she found the right one. And like I said, that's inside the Ultimate Real Estate Investing System, inside the Real Estate Wealth Builders, literally a laundry list of all the students found, property managers, mortgage companies, all that sort of stuff is literally all done. So, you have that there. Okay, so Jason, what are some strategies for building credit with a new LLC? Like I said, it's basically get something small. Uline is uline.com, uline.com. You can buy maybe some shipping boxes or packing tape. Just buy it from them. You can actually get a credit card from Uline. That's one option. Actually, I think I did a whole video. So honestly, I did a whole entire video. I don't have the link. I'm not going to put it in there. But if you just, go to my channel, search for business credit, I did an entire video on how to do that, literally walking you through everything, how to build it up and stuff. Okay, Eli. So I will turn 18-year-olds in 6 months. Eli, awesome. So you're almost 18-year-old, and you're here learning about investing. I'm so excited for you. I love helping people. Like my kids are literally not going to go to college. That $50,000, $60,000, $100,000 I would normally pay for college, I'm going to say, let's buy houses with that. Why in the world would you go to college when college is just to make, get a job to make money? Why not just skip all that, buy properties, make money, which is my kids are doing. Okay, so Eli says, I will go to college at heavy scholarships this fall. Good for you, man. That's awesome. I have $25,000 to invest. Why should I go with your program? And how should... Yeah, so why should I go with your programs? Well, and how soon should I start? My opinion is the sooner you start, the better, because people ask me the question. I'll answer your question on why in just a second. But what happens is people ask me, well, should I save for investing? Or should I start building a business? Or should I start learning? Or should I pay off my debt? Or. My opinion is literally do all of them. Do all of it. And the big reason why is real estate moves so slow. But you need to have education. Just like if you're going to go to college to get whatever degree, you need that education to be able to land whatever job you want to get. If you want to get a job, same thing with building a business. You need to learn how to build a business. Number 2, you need to build the business inside the Ultimate Real Estate Investing System, where I do all the teaching. That's in the Real Estate Wealth Builders as well as for the courses. I literally walk you through step by step how to do it. And if you learn something, when you learn something, if you literally do it right then and there, by the time you're done with the course, you're going to have just about everything done in the business, and you're going to be moving forward. You're going to be already finding properties, you have a new area of the country to invest, all that sort of stuff. You will literally step by step be able to go through all that. So now that's should you start now? 100% start now, because the sooner you start, the sooner you will be able to buy properties, and you never know what deals are going to come up. You're going to be in the market long enough to see properties come on the market. That's a great deal. I'm going to jump on it. But if you're not in the market, you're not going to get that. Okay, another one. Answer why. Why should it? Well, hey, it's really up to you. I'm just here to help. So I believe that the way that I invest has got me and my family to literally not have to work. We travel the world. We do whatever we want. We're super, super blessed. But the biggest thing is I can be home with my family. I don't have to work a job. I'm looking, actually, here it is. So I haven't done it yet. I've been talking about this for a while. Here's my diploma. It's literally wood. It's literally wood. So this is what you're looking forward to, Eli. Now, I'm literally, I found this in a drawer and I pulled it out. I'm like, I am literally never going to use this again. This is junk. I paid, I don't know, thousands and thousands of dollars for this piece of junk here. And what I'm going to do is I'm literally going to blow this up. I'm going to get some, I don't know, tannerite or something, get my pistol, which is probably right there, or my rifle, and blow it up because it's literally a junk now. I don't need it. That's the reason why. Now, a lot of people, it's great for them, but us as investors, we don't need it. And the big reason why is in life, all we want to do is make money to provide for our family. That's the main thing we want to do, and have luxuries. If you can do that by skipping over college, not saying you should, don't get me wrong, Eli, you're not supposed to, you're not should, but why you should is because I've proven it as well as all my other students. So if you want to check out my testimonials, go into my YouTube channel. There's a playlist for testimonials. You'll literally hear all other students that have been successful. All right. So, hey, Terry, good seeing you again. Hope you guys are doing well in Mexico. So if I buy a property and pay in full, how long before I can do a refinance and pull the money out, and what percentage? So it's 6 months most times. Sometimes some banks might be 3 months, but it's called a seasoning period. That's where the property is in your own name for 6 months. It's seasoned, means it's not money laundering and all that sort of stuff. That's a term. So 6 months. But then what percentage that you can pull out? It's usually about 75% is a safe number. Like you will definitely be able to get 75%. A lot of banks are 80% though. Never do they ever go. I've personally never seen 85%. I could be wrong, but I've personally never seen that. So Anthony says, what difference would it make for someone if they had over $700 in credit versus if they had $800 in credit? Literally nothing. Maybe one or two little like fraction of a point. There's nothing that's going to be different if you have that much credit versus the other one. Okay, so I got another question for somebody in the Facebook group. So this would be their very first property. And I'm looking to invest in Dayton, Ohio, with a seller who wants to do seller financing. And what are the next steps? Who makes the contract for seller financing? What am I allowed to have in a home inspection to look at the property? So I think it's Jersey. Yeah, Jersey. So Jersey, with doing a seller financing, it's literally on the table. Everything is on the table. It's whatever you can get your seller to actually let you have, like how much down payment, what's the interest rate, if you need a balloon payment, if they're going to pay for some of the fix-ups. Literally everything is negotiable, Jersey. What you want to do is you want to talk to the seller. So when you're talking about who writes up the contract, you absolutely write up the contract. Inside my real estate investing system, inside the Real Estate Wealth Builders, I actually have a purchase contract that you can absolutely use. Just go to the downloads tab inside there, download that, and you can use that. But then you also put in, and everybody, you must do this. This is a huge, huge thing, huge pro tip. I say this all the time. Make sure you put a 10-day, minimum 7. 7 is like the bare minimum. I wouldn't go any lower than that. But I like 10-day inspection period so that you can inspect the property, have an inspector inspect the property so you are not going to be surprised with a bunch of problems. So yes, you can absolutely do all that, but make sure you negotiate. But anyways, Jersey, inside the Ultimate Real Estate Investing System, inside the Real Estate Wealth Builders, we talk about all that stuff with the seller financing. Okay, I think we got another question. Do you have a separate bank accounts for your rental income or just one for your LLCs? So you don't need one per property. It's one per LLC. So you can have multiple properties. Sorry, let me go ahead and say this. I'm not an accountant. I'm not a lawyer. So definitely talk to both of them. Get those people on your team. So talk to them, see what they say. But what I've been instructed is that you can have one bank account that has all the properties money. Even if you have multiple LLCs, put them all inside there. And you'll be able to utilize that one LLC. But don't put it in your own personal bank account. They call it commingling funds. You don't want to do that. Make sure it goes into your own LLC bank account. Okay, well, hey, guys, it's been awesome. I want to do more of these. So if you guys like this, when I'm done, go ahead and put in the chat that you want to have more coaching because, I love talking about this. It's a lot of fun. And it seems like it's somewhat of a good turnout for YouTube Live. But anyways, it's been great having you guys. And definitely subscribe if you haven't already subscribed. And I'll see you guys in the next one. We'll see you.